markets have been running very long. And so when you have 14 out of 15 weeks, you're going to get a breather here. If you take a look at the last time we had a 2% correction in the S&P in a given day, it's been over 150 days. So the markets are very overbought on a relative strength basis, also consistent with periods. Now look, markets can stay overbought a lot, for a long period of time, but these overbought conditions typically lead to a reversal of the market at some point. Some corrective or consolidative action gives you a bit of a pullback. This is what you need to know before the bell this morning. So again, talked about the fact that markets are above 5,000, completely fine. But there's some, as I said, there are certainly some things kind of underneath the surface that warrant being a little bit more cautious. So first thing is the market has now been positive 14 out of 15 weeks in a row. Now, that hasn't happened since 1972. So the important similarity to that, of course, is that this rally is being driven by the Magnificent Seven, right? We hear that a lot. We've written about it. Basically a handful of stocks really kind of driving the markets. The similarity to 1972 was back then it was the Nifty 50. So big blue chip companies driving the market at that point in time. Now, if you don't remember what happened following 1972 was the 1973-74 bear market. So again, markets were hitting all-time highs in 1972. It was the Nifty 50. Everything was fine. Lots of momentum in the markets. And then you had the 73-74 bear market. But it took longer, right? 1972, and the bear market didn't start till 73. So, markets can continue to go a lot longer than you think. But again, just markets have been running very long. And so when you have 14 out of 15 weeks, you're going to get a breather here. If you take a look at the last time we had a 2% correction in the S&P in a given day, it's been over 150 days. So again, a very long period without volatility. This has been a very low volatility advance. Market declines are very mild. Market advances just kind of grind higher every day. Of course, the markets are very overbought on a relative strength basis, also consistent with periods. Now look, markets can stay overbought a lot, for a long period of time, but these overbought conditions typically lead to a reversal of the market at some point. Some corrective or consolidative action gives you a bit of a pullback. Take a look at volatility. The volatility index continues to be very, very low. Again, there's no concern right now of a volatile event, right? So there's no concern of a correction or a crash within the markets. And again, so you have very low volatility. You've got markets that have just been kind of, pushing higher every single day. And as Sam Stovall once says, like when all the buyers have bought, who's left to buy? So at some point, you're going to get somebody, for whatever reason, raises their hand and says, I'm out, I'm going to sell. And then you kind of get a cascade of selling. What causes it? Who knows, right? Could be an event, could be a topic, could be CPI this week. Lots of stuff going on. But there's a lot of things that can pop up and just trigger. And again, I'm not talking about a crash. So don't go run off and say, oh, Lance said the market's going to crash. I'm not saying that. But a 2 to 3 to 5 to 10% correction, certainly very likely. It's a very high probability sometime over the next 3 to 4 months. So again, just timing is always the issue. But just remember that this is the way markets work over time. Importantly, as we continue to talk about, this remains a very lopsided market overall because, again, it's been just primarily large caps driving the markets. We talked about small mid caps continuing to really just kind of grind sideways here, have these little spurts of activity and performance, but still remain well below their all-time highs. So again, small cap, mid cap still on a sell signal here. So again, we may see some rotation also within the markets. So again, that's also one thing to think about. We may start to see some profit taking in some of these large cap names, maybe rotate to other areas of the market that have been underperforming, lagging, those type of issues as well. So again, that's part of the reason for the rebalancing of our portfolio, taking profits in big winners. Nvidia, as an example, just had a very, very large run this year so far. Just since the beginning of the year, Nvidia's had a very, very strong advance, almost just going parabolic here. So, take some profits in stocks like that we own, buy some companies that have not been performing as well but pay big dividends. Those tend to be a little bit more defensive in nature. So again, those are the type of actions to think about. Just doing some rebalancing, some nipping and tucking, raising a little bit of cash. certainly won't hurt you. You'll still be able to participate, but if the markets do start to correct, you've already done a little bit of the work, and then you can go into further risk management mode at that point. That's what you need to know before the bell this morning.